50 years. 50 years, 600 months is what is being talked about and gaining a lot of traction for the newest installment of what the government will let you finance, the period of time they will let you have your loan. Now, normally it's a 30-year mortgage, or sometimes the 50-year lets you stretch it out and you are making smaller payments each and every month, but it's closer to about $200 is what is being estimated of what you're saving. Now, is this something that can actually help with affordability like it's being proposed as? Or is it something that is used to keep you in debt for life? Let's look at those numbers today and see what the real answer is. Now, if you're new here, my name is Gleason Jones. I've been in the mortgage industry for over a decade and also got licensed as a real estate agent so I could understand both sides of it better to help you understand more of what's really going on in the mortgage and real estate world. Let's jump into today and see exactly what's going to be best for you. Now, let's jump into what is a 50-year mortgage. A standard 30-year mortgage is you finance your home and you're paying it off over a 30-year lifespan. Kind of like when you buy a car and you finance some of it, you have a certain amount of years that is allowing you to pay that off instead of putting it all down right at the beginning. So a 50-year is making it exactly what it sounds like, going 50 years instead of that 30. This is supposed to help you reduce your monthly payments and you're able to afford more, but you're having to sacrifice when it comes to it. And you're also going to be paying on the back end a lot more. Let's look at the whiteboard and see exactly what you're actually paying. So if we look at the numbers, then a 30-year compared to a 50-year, and we're going to say that this is for a $400,000 home. And we're just going to keep it that way just to keep things simple. Now with the 30-year, we're going to say you have a 6.25% interest rate, which will come out to around $2,000 a month. If you are in that 30-year mortgage the entire time, you'll pay around $400,000 of interest to the bank. This is combined about $800,000 that you're paying for a $400,000 home. This $400,000, the interest, are what banks make off of it. This is how they make the money. If we look at a 50-year, we're going to say a 6.5% interest rate, and you're going to be saving around $200 a month because you're only paying that $1,800. So you're saving $200 a month, but if you're in that loan the entire time, then you're paying over $600,000 of interest for that life of the loan. Now, this doesn't mean that you're going to pay all of this because you're probably not staying in a home for 50 years, but if you do, that's the amount you'll pay. So you'll pay over $1 million for a $400,000 home. Now with the simplified numbers, you'll see that you're only saving about $200 a month, which can be great and it can be a huge game changer for a lot of people, especially first-time home buyers. But if you're staying in that loan for the life of it, you're paying almost double in interest what you would for the same home as a 30-year mortgage. So then it comes to the question, oh, if I'm only staying in it for this amount of years, I'm not paying that giant sum of interest, then wouldn't the 50-year mortgage actually benefit me? Well, that's when a new layer comes in, which is your home ownership or equity that you have in the home. When you're paying on a 30-year mortgage compared to a 50, you're gaining home ownership and paying off that loan more and faster. So if you're paying a lower monthly payment, you're not gaining that home ownership as effectively or as fast as you would in a 30-year compared to a 50-year. But are you going to be saving more than you're going to be losing, right? Are you going to be saving more in that lower monthly payment compared to the less amount of home ownership that you're actually gaining? And the answer is no. Now, if you look at a 5, 10, and 15 year, going back to how we talked about the average time that people actually stay in a home, you're actually losing money. Even with your home going up in value, you're still not gaining as much home ownership or equity as fast as you would compared to a 30. Now, first, it can only be maybe a couple $1,000s, but when you get closer to the 15, 20 year mark, you're tens of thousands of dollars behind of what you would be. Now, you're still gonna be able to sell the home and have that equity in your house, but are you okay with giving some of that up when you get there? And that's the question you really have to ask yourself. Are you okay with sacrificing some of that home ownership that you'll be building up, because you're still going to be building some, just not as much, just to get a lower monthly payment? Now, this is something that can be great for people who are able to use this to afford more, right? And it's something that can be helpful because it means that you're going to have that lower monthly payment, which is the biggest thing and the main reason for this. It's to help affordability because of the rising home prices, right? Home prices are rising faster than what your income level is, and that's been happening for a while. Now, the whole reason that this is even an issue is because it could be meaning that you are in debt for basically your life, especially if you go through the full term and you never move. Now, that doesn't mean that the 50-year mortgage is bad or all bad. It can be a great asset for those that really need it to help them qualify or maybe get just a little bit more house, because $200 difference can be the difference between a $350,000 house and a $400,000, a $150,000 and a $200,000. And it can change where you are living, your neighborhood, school districts. It can change a lot about the house. So it's not all bad, and it has some great things about it. Think about this. Back in the day, 15-year mortgages was the normal. That is what people were getting when they got mortgages on their homes. And then the 30-year was introduced, and that became more of the norm, right? And maybe that's people had the same reaction when that was happening. Like, a double the amount of time that I'm gonna be paying on this. But now, like I said, that's the norm. It goes the same with how car loans happen now. A lot of times they were maybe 2 or 3 years, and now I've seen some that people have 8-year loans on a car, and it could just be going up from there. Maybe next it'll be 15 years. And that's the issue that we face with this dilemma is, are you okay with sacrificing a longer time to a possibly depreciating asset? Or do you feel like you are going to be in a better situation because that you are having to spread them out more? My personal take, I think the 50-year mortgage is a great idea for those that need it and aren't going to be spending the entire 50 years in their home. Maybe closer to that average of 7 to 10, but you're okay with sacrificing a little bit of home ownership because you know you're going to be selling or refinancing before that. Now, if you are able to afford already comfortably and you're just looking to pay a little less, I don't think this is going to be for you. There's different ways that you can do that. Maybe that's doing a temporary buy down, meaning that you're for 2 years that you pay a lower interest rate until it gets to that full one on the 3rd year. Maybe you do a permanent buy down, or maybe you use some of the closing costs from the seller and you're able to buy down that rate even more. The 50-year mortgage is not something to be scared of, but it's definitely something to watch and possibly use as a tool if needed, but I wouldn't go there to begin with. Now, that could change in the future depending on how they start to structure this, because the biggest thing you have to remember is when it comes to a 50, 30, and a 15, the higher that you have a loan term, it means it's going to be a higher interest rate because it seems riskier because it's a longer term to the bank. If it's a 15-year, you're going to have a lower rate, but the payment is going to be a little bit higher because you're paying more in a shorter amount of time. Same with a 30 compared to a 50. Right now, rates, if they are saying maybe that 6.25 that we talked about, then your 50-year is going to be closer to that 6.5, and that's just an estimate. So my honest take on it is the 50-year mortgage is something that can help a lot of people afford more and get a roof over their head without having to go and rent. But it's something that could also load up debt, and maybe too many buyers are going to skyrocket prices even higher. So it's something to look out for, but not necessarily be scared of, at least right now. Now, the next thing is to just prepare yourself. So what's going to happen next? If lenders start offering these 50-year mortgages, we're possibly going to have more home buyers and new buyers on the market. Home prices could start to go up even higher because there are so many new buyers on the market. And if people aren't building equity as fast, they could be stuck with a lot more debt than they were hoping for if things start to go down. So if you're thinking about getting into a loan and want to learn more about the 50-year mortgage, I would highly suggest running your own numbers, talking to an informed loan advisor, and just preparing yourself not just for today and tomorrow, but 5-10 years down the future. So that way you know exactly what you're going to be paying, what you can afford, and what's going to set you up for success. And I want to know what you think. What do you think is going to happen with these 50-year mortgages? Do you think they're a good idea? Do you think they are something that we need? Or is it just, like I said, something to keep you in debt longer? I'd love to hear your ideas on it. And if you want to talk more about it, then be sure to reach out and let's see what your numbers look like. Now, if you enjoyed this video and you are thinking about possibly renting, check out this video. It's a little bit older, but still has all the great things about it. And then this video is just going to be what YouTube recommends you watch next. I'll see you guys next time.